Welcome to the Portland real estate market update. And this time I have a fun little feature. I'm going to have my forecast in there for 2023 as well at the end. So if you are a investor in the Portland area, or if you're just looking to buy or sell a home in the next 3 to 6 months, definitely take a look at this. So that way you will be the most informed. So my name is Brad Hammond with Keller Williams. I've got my info right there on the screen. If you are looking to chat, I would love to talk real estate with you. All right, so I've got some quick summary information here. If you don't want to watch the whole thing, I won't be offended. But what we're going to be going over is listings are still falling. I think that maybe that might just be seasonally adjusted. I do think that in January, I've seen an uptick, and I think in February and March, we're just going to continue to see more and more listings coming on the market. Price improvements are common for the right properties. I'll get into this a little bit more in detail. The median home sales price keeps going down. Right now, we're at about mid 2001 price numbers. And honestly, we're not that far off from what things looked like from pre-pandemic levels. It's a little bit lower than that, but more or less right in line with that. And then also the best deals are when there's no light at the end of the tunnel, which I think is right now. I think there's going to be some more good economic data coming here in the next few months. So people are going to be a little bit more sure of themselves, which will kind of make people not want to sell at rock bottom prices. And with that being said, the market is changing very, very quickly. So make sure you are up to date. All right, so current interest rates. Take a look at this APR. Right now, we are at just over 6.1%. This is for capital M lending. I got these numbers last week, so they are still very, very current. And that's for a conventional 30-year mortgage. Other types of loan programs are going to be a little bit different than that, but that's usually going to be your best rate is the 30-year conventional owner-occupied loan. So here is a little graph of what rates have done in the past 5 years. So this gray line right here, that signals the recession in early 2020. But look, we have this big uptick that's happened late last year. And now we've kind of started to come down a little bit as well. So I think we're kind of already hitting the peak, and we're going to stay more or less around this point for a little while. We don't have really big economic data coming anytime soon. You know, we've got the jobs reports and things like that, but people aren't necessarily predicting big changes in the next handful of months. Okay, so closed sales. So if you compare 2018, 2019, so the purple and the yellow to where we are in the red for 2022, like I was saying before, they're not too far off of the pre-pandemic. We're not too far off from the pre-pandemic levels. But look, if you compare it to 20 and 21, yeah, it looks like we've fallen off a cliff. But we're just kind of getting a little bit back to normal with those ridiculously low rates that really juice the market. And since those have kind of gone away, there's not as much buyer demand out there in the market. Taking a look at pending sales, it's kind of honestly followed the same kind of line, which I think is really nice. It's followed the same line as 20 and 21, but you know, just less volume. So when you have lower pending sales, you can expect to see more total active listings. So higher active listings on the market, more listings means more options for the buyers, and then they're allowed to make more thoughtful decisions. They're not under the gun to make an offer within 2 days, half a day of seeing a property, which is good. Sometimes they can actually go back and take a look at it again. And I think this is overall a great snapshot of what the current market kind of looks like. You know, it's a little bit off from the past couple of years, but still trending with the normal fluctuations of the market. So we've got new listings. Because there isn't a huge rush of sellers to the market, that's really, really good. I cannot overstate that enough. If this December number were to be up into the 3,500 mark and above, then that's when you would see all these price reductions and things like that. But because we don't have a ton of these new listings, that's really keeping the sales prices in line, and we're not seeing those, those huge price corrections and things like that, and home prices aren't falling by 25-30%. Oh, let me go back to this real quick. So new listings, I do feel like in January, I have seen more listings coming on the market. December is the last information that's available, but I am anxious to see what January looks like. Same thing with February and March. I think those are just going to keep on going up and up. But I have noticed it in the market where there's definitely more listings coming on, and also with that, more buyers as well that are coming into the marketplace. Okay, so days on market, because we have less demand, and we do have less demand and slightly more inventory, our days on market went a little bit higher. Honestly, I think if you go back to December, we've got the holidays in there, and then we had that big ice storm. It kind of shut the city down for almost a week. I think that played a pretty big portion of those days on markets. I would look for that to go down in January as well, closer to the 40-day range. We were at 55 for December. And then months of inventory, we were at 2.4 months, before the pandemic started. And then now we're at 2.3, so kind of where we want to be. For Portland, a balanced market is considered 3 months of inventory, so we're still considered a seller's market. It's just not going gangbusters where it was before, when we had 0.8 months of inventory. So definitely something to keep an eye on. I would predict that this will go continue to fall in the next handful of months as well. Okay, so this is what everybody wants to take a look at, is the median sales price. I like to look at the median and not the average. It kind of tapers off the super high and the super low numbers, so it gives you a little bit more accurate picture. So that's going to be this red line right here. So yeah, things have been going up, up, and up, and up. And then right when the Fed started increasing the rates, mortgage rates started going up in tandem with that. And then that is when sales price starts to fall. So sales price right now is 548,000. Let's call it 550,000. And that is an average. It's a little bit of a number it's a rolling average. So even though you're not going to see that here, that's the rolling average. If you take a look at the beginning of the year, that's when prices were really going up. That's when there were more transactions. So it's going to be more heavily weighted for that. But right now, it's looking at average home prices right around 520, 515, somewhere in there. And so if we were to kind of trace this along, we're looking at about September, maybe mid 2021 numbers is where we would be comparing it to. Okay, so some of my takeaways. Look, so lower prices, it is in direct correlation of higher rates. And it's always about the payment, not the price. And I think that the last year or so really kind of proves that, because when rates were really, really low, you had higher prices. When rates went up, you had lower prices. So that's really all that matters. People have a X amount that they can spend on their housing or for an investment per month, and they're not really looking to change that. So if they can afford more because of a lower rate, then they are absolutely going to do that. I think that we've seen the highest rates that we're going to see, and they're going to continue to fall for the foreseeable future. I've got a fun little slide on that in the next round here. And take advantage of the dip that just happened and that's happening now. I really think that this is kind of the crucial point, because rates are starting to fall. There's still some inventory out there, and you can get some great deals. I mean, I'm kind of seeing both sides of it. I'm seeing where I'm able to get properties at 60 grand under asking price, and I'm seeing properties that have 12 offers on it. It just depends on the type of property and things like that. But if you can take advantage of this time right now, get something under contract that's been sitting on the market for a little bit, that people haven't wanted to invest in, and you can get a lower rate, then you're winning on both sides. And then keep an eye on the consumer price index and the unemployment data when it comes out every month. That's going to be kind of the best indicator of the rates and then therefore home prices. Or just keep an eye out for this when I publish Zone 1 sometime next quarter, right around probably April or so. Things have started to heat up again in January. I've seen more listings. I've also seen more buyers that are interested in purchasing in January, and that's just a lot of what my colleagues have seen as well. So fun things happening in the market for sure. I think it's continue to heat up, not where it was the past couple of years, but definitely somewhere in between, which I think will be nicer, a little bit healthier. All right, so let's take a look at my forecast for 2023. Don't hold it against me if I'm completely wrong when we look back at this. Okay, so kind of what I was showing you with the rates before, you know, they've gone up. This is a 1 year snapshot. They've gone up, up on up, and now they're starting to kind of crawl back down. Again, I think that we've peaked in interest rates. There is more good economic news coming out than bad. Yes, there are some tech layoffs, but that's really just kind of one industry. And it's not really affecting other parts of the economy. I think that the tech industry is more right sizing rather than just trying to stay profitable and things like that. Okay, so mortgage predictions. So these four entities, Freddie and Fannie, Mortgage Brokers Association, National Association of Realtors, they are really smart people that come up with their predictions for what rates are going to look like, and they've got it divvied out here by quarter. So you know they're saying an average of them are saying it's going to be 6.35. So I think that they're slightly off with rates being 6.15 right now. But look, they're going to continuously say that rates are going to continue to fall throughout the year. I personally think that they're going to be about half of a percentage point lower than these numbers. Okay, mortgage delinquency rate. So if anybody is at all worried about foreclosures, I think that this kind of says that that is not going to be a factor whatsoever. Let's see here. I pulled this. This is for a 10-year average. So you can see in 2012 there were a lot of delinquencies, and then they've just kind of gone down and down and down. Again, here is where we had our quick little recession. Slight little uptick, and then they are at historic lows right now. I think it's something like 1 or 2% right now of mortgages are in delinquency, and there's just really not a reason for a property owner to have to go to foreclosure because they have so many different options, whether it's just selling on the market, but they've got so much equity, it really doesn't make sense for them to foreclose and lose all their equity that they have. They'll just sell it to an investor or to on the open market. So my forecast for the year is prices are going to continue to fall until about the middle of the year, and that's when rates are going to go up into about the fives. And then once that happens, you're going to continuously see buyers enter the market. More inventory coming on as well once sellers are either forced to sell or feel like now is a good time. So single family homes are, in my opinion, already near their bottoms. Small multifamily, the 2 to 4 units are close to their bottoms, and then large multifamily, those big commercial properties, they're still a ways away. That's probably where the next deals are going to come from. I'm hearing less talk of a recession, but more talk of the Fed being able to do that soft landing for the economy. I personally don't really care if there is a slight recession or if they're able to do a soft landing. The Fed has so many tools in their belt to help the economy if there is a recession that I think it's just going to be pretty soft and minimal. So it's not really going to affect us too much. I have heard that consumers are thinking this recession is not going to be like previous recessions where they're going to be impacting a large portion of what they're spending. It's mostly going to be on consumables, things like that. They're still going to be paying for experiences, and they're still going to be finding money for homes and things like that. I think that we're more or less at the bottom of the market right now, and prices are going to continue to go up. So I think that if you are interested in purchasing, maybe wait till March, first quarter, second quarter, third quarter of the year, but it's just going to depend on what you're looking for and what's important to you financially. If you're looking for cash flow, you might be able to wait a little bit and find some slightly better deals when the rates come down just a little bit more versus going out there right now. But no matter what, you are always going to have to work for those cash flowing deals. They're probably going to be problem properties. There's something that needs to be fixed to them. But good deals don't just fall in your lap. You have to create them. You have to make them somehow. So let's get creative and find those fun little deals. That's all I got for you. If you are at all interested in buying, purchasing, investing, hit me up. I love talking real estate. So I'm happy to jump on a call with you, Zoom call, meet you out for coffee or a beverage, and we can talk about this stuff, talk about what is best for you and your plans. All right, so until next time, we will see you soon.